China's economy. To give you the China perspective, please welcome Gao Song.
Thank you. Thank you. So, I'm here from Beijing, and PR's macro, first of all, is a China-focused micro and policy research. So we focus on monetary policy, fiscal policy, and with particular interest on commodity. So my job today is to fly 1,000 miles away from Beijing to Singapore to explain how China can grow at 5% with the collapse of the housing market. And the fact is that I think the market and most people in the market have overlooked the progress China has made for its transition. So from title, it's pretty simple. China has been making a massive transition from energy and related manufacture away from property. That will be the driver of China's growth. So at the start of my presentation, this is a great time to look back. What are the scars from COVID on China, right? So we did a forecast, an estimate of China's potential growth before COVID and without COVID. I mean, without COVID and with COVID. So if you see the orange line on top, that is the Chinese potential growth without COVID. So even without COVID, with the restructure of China's property market, China's growth is supposed to slow down in 23, 24. But we should not slow down at this much, at this scale. But by 2030, China's potential growth will bounce back. But now, when we look at the right line, that's Chinese potential growth with COVID. Okay, so we see the permanent shock to China's potential growth from COVID. China's growth will bounce back in the next couple of years, but this has already have a permanent impact on China's potential growth. So now the question is, who has contributed to this permanent shock to China's potential growth? So if you look at the chart on the left, that's industrial production and versus pre-COVID trend. So if you see there's no damage, there's no a single dent on Chinese capacity supply or industrial production from COVID. But when we look at the chart on the right, that's the Chinese consumer spending versus pre-COVID trend. Apparently, consumers have contributed a line share to this negative shock, permanent negative shock to Chinese potential growth. And we are lost 8%, 9% from pre-COVID trend for Chinese consumers. And if you look at the chart on the left, on top of that, the red chart, that is the actual household deposit with the banks. And the blue line, that is the actual household leverage borrowing, or think about as proxy for propensity to consume and after the COVID shock. The dotted lines are the pre-COVID trend for household deposit and household leverage. So you see, if we did not have COVID, now what's happened was Chinese consumers will take out more loans, but at the same time they were saving more too. But Chinese economy was on path to rebalance itself towards consumption-driven economy. But with COVID, I think now we are facing a permanent disruption to China's rebalancing towards consumption. That also related to the gold story. When you look at the chart on the right, this is gold prices denominated in RMB versus a survey from PBOC, China's central bank. The percentage of households responded to a PBOC survey saying that I intend to save more in the next 3 months. So see, what has been driving gold price in China? Household saving, right? Households precautionary saving, especially for Chinese household. Yes, gold does not yield any, does not give me any yields, but risk reward wise, it makes sense to make more allocation to gold in my portfolio, right? But that's not the big story here. The biggest story is this. Right now, we're looking at this huge amount of excess saving from Chinese households, 26% higher than pre-COVID trend, right? 8%, 9% down for Chinese household spending. Where those money going to end up with, right? That's the billion question, the $1 billion question. Well, the answer is pretty clear this year. If private sector is not going to spend the money all this 26% windfall from retail financing for Chinese households, then the government, the public sector, would have to spend the money. So if you look at the chart on the right, that's the year-over-year growth of Chinese augmented spending. The news here is that since 2021, China has been in fiscal austerity, and this year, it'll be the first year that Chinese government spending will turn into a positive growth, 6 to 7%. Okay, so the end of austerity, public sector spending, that will be a way to solve this excess saving problem from households. Another question, so if the government is going to spend money, where are they going to spend money, right? Developers not going to borrow money, local governments are capped with their debt ceiling, and who else is going to borrow money? The government is going to invest, or have already invested heavily in energy sector. So energy infrastructure, power generation capacity, power grid, that is the new driver for China's growth. So if you look at the first chart, the chart on the left, that's the Chinese investment in new power generation capacity. Last year, growing by 30% year over year. Think about how much we have invested in power grid last year, 5%, right? They created a really interesting case, which is when I look at the chart on the right, this is copper prices versus the production of large-scale power transmitter in China. Production of large transmitter in China also leads copper prices by 12 months. This chart basically tells us that China has produced massive power transmitter, large-scale transmitter, and those transmitter has been shifted to construction site, but those transmitter has not been connected to power grid, right? Exactly the same problem we saw from the chart on the left. So who are those guys who are not being connected to the power grid? The first chart here is pretty self-explanatory, right? It sent us two messages. One is that since outbreak COVID, did Chinese regulators just crack down on some private sectors or public sectors? Did they do anything really supportive to the growth or something about the economic transition? Yes. They have been doing massive energy investment, infrastructure investment in the last 3.5 years, right? You see it very clear stand out, energy investment. Second, 2023, that was a crazy year for energy investment. And 70% of Chinese newly installed power generation capacity come from renewable energy. Right? That's not a surprise, but like I said, what is important is that we have 70% newly installed power capacity coming from renewable energy, which has been driving 30% power generation capacity growth last year, but they have not been connected to the power grid. Right before this NPC, all the top Chinese leaders sat down, had a study session. They talk about we need to link renewable energy to the power grid. Okay? So that's why power grid investment is going to be not only going to be one of the biggest stories this year, it's going to be one of the biggest stories in the next 3 to 5 years. Another interesting case is that if you look at the chart on the right, that's projected Chinese power consumption growth versus Chinese coal production, domestic coal production. You saw two things. One is that Chinese power consumption has experienced a structural upward shift. For example, if you look at January, February this year economic data, you saw property investment down by 9%, but how much power consumption grow? They grow by 11%. Manufacture-related power consumption growing by 9.7%. Service sector's power consumption growing by 11%. The entire society in China, in the last 3 years during COVID lockdowns, we already made a major transition towards power demand. Okay, so now, why Chinese manufacturer households now all of a sudden use more power? Why they're doing this? Where they're using their power? Look at the chart on the left. This is the Chinese breakdown of a major export item from China last year. And on the right side, that's a quantity year-over-year growth. On the left side, that's a price change year-over-year. So if you look at the very top of those exports, Those are the traditional Chinese exports. If you think about what the Chinese are selling to the rest of the world, right? Toys, clothing, PC, cell phones, all labor intensive. What they're doing last year, terrible. There's no growth. But if you look at the bottom chart, this is the Chinese new export, right? What we're selling to the rest of the world last year was selling fertilizer, gasoline, diesel, steel, solar panel, auto parts, lithium battery, solar, this is not surprising, right? But what's in common in all this new export growth? They're all growing by 20%, 40%. They're all energy intensive. So you see from Chinese export last year, you see the answer. The answer is that Chinese manufacturer has already shifted from labor intensive to energy intensive. How that happened? Because in the last 3.5 years, Chinese government has invested massively in upstream of energy infrastructure and power generation. It feeds cheap, stable power supply to manufacture, energy supply to manufacture. So not only for fossil fuel, but also for renewable energy. So if you think about China used to be a country with cheap labor as natural endowment, it makes a lot of sense China should produce labor-intensive products, right? But when all of a sudden Chinese manufacturers enjoy this windfall from energy supply, what are you going to do? You're going to produce more energy-intensive products. You reinvented yourself. You climb up the value chain that was enabled by this massive energy infrastructure investment. And well, that created a problem. The problem is that when we invest so much in upstream energy investment, infrastructure, we bring down the price. There's a windfall cost. There's a cost windfall for all the Chinese manufacturers, but they also grow the capacity of production, right? If you also think about the 26% of excess saving from Chinese households, where those money eventually end up? They end up in manufacture. They end up in manufacture growing their capacity. So that's why when I look at the export part, yes, for the new driver of Chinese exports, we're growing by 20%, 40%, will become much more sophisticated. But on the price-wise, prices are falling by 20%, 40%, which means once Chinese move along the value chain, we also destruct the value, right? So now, Chinese manufacturers need to create new markets, new demand for that, for their capacity. That's what the chart on the right tells us. The right bar is Chinese outbound direct investment, okay? And there's a little gray bar by the red bar, that's a Chinese outbound direct investment financed by RMB. So you see, by 2015, we had a boom bust for Chinese ODI, but at that time, only 10% of Chinese ODI was financed by RMB. You look at what happened last year. We had a historical high of outbound direct investment driven by Chinese companies, and 50% of those outbound direct investment have been financed in RMB. That's why this outbound direct investment is sustainable compared with 2015. Also, you see where the Chinese are investing their money. The blue line is Chinese outbound direct investment to ASEAN countries. The yellow line is Chinese outbound direct investment to European Union. So the Chinese are going into emerging markets, especially Belt and Road countries, ASEAN countries. They invest in manufacture, infrastructure, power grid, railways, financed by RMB. Then in return, they will demand more energy-intensive exports from China. So, well, that was important for the question is that, when China's property slow down, will China reinvent itself, find a new growth drivers to offset property slowdown, eventually rebound? My answer is yes, but this will be a painful process. The good news that we are all, we're more than halfway through that. So the chart on the left, that is the green bar is the contribution to China's GDP growth from property market. Okay. The blue bar is contribution to China's GDP growth from renewable energy and power grid investment. In this part, it did not even include thermal power plants investment, nuclear investment. Okay. So we see that back in 2022, we cannot offset slowdown from property market. And also we add Chinese contribution to China's GDP growth from export to ASEAN countries as proxy for Chinese Belt and Road investment. But last year, a barely break even, okay? This year, we're going to outgrow from this property slowdown. Next year, all these new drivers, which are energy-driven infrastructure investment, leading to more manufacturer CapEx spending, making Chinese manufacturer much more sophisticated and climb up the value chain. This will be the new driver of Chinese growth. And on top of that, it will be financed, demand will be financed by RMB for outbound direct investment. So that's why we think China can grow up from a property slowdown. Just most people ignore what's really happening in China. Because for example, if you look at January, February this year, like I said, I want to look at property market slowed down by 9%, but if you look at manufacturer CapEx spending, grow by almost 9% positively. If you look at infrastructure investment, higher than 8%. But if you look at the breakdown of infrastructure investment, power, gas, and water grow by 25% year over year. Okay, like I said, power consumption also growing by 11%. I mean, this is the new China. This is how the manufacturing transformation driven by energy revolution will bring China back to its potential growth. Also, if just in case if people wonder, do China have money to finance its energy investment? So we did an estimate for Chinese funding for infrastructure this year. As you see from chart, this year will be also a very important year for Chinese infrastructure investment. In fact, funding-wise, we're probably going to have 20% growth. And from conservative estimate, I think that will be way more enough to drive 10% growth from infrastructure. But also, just to remind you, this new infrastructure investment is totally different from previous decade. It's no longer on industrial parks, railways, airports. These are on energy and public housing. So finally, just want to show you the two charts, which explains, well, even if we just look at 6 months, 12 months down the road, can the Chinese economic fundamentals rebound? It also kind of echo our story is that if you look at the chart on the left, that is Chinese power generation investment versus Chinese manufacturer inventory. Power generation leads Chinese manufacturer inventory by 12 months. Tells us that we are at the tipping point of manufacturer restocking in China. If you have time, so it also explains that where this restocking demand will come from energy investment, come from energy transformation. Okay. Also, if you look at another chart on the right, that's the Chinese manufacturer inventory cycle versus Chinese property new starts. This year, one of the biggest initiatives from the government will be public housing construction. This will last 3 to 5 years, provide 9 million to 11 million units of public housing, eventually bringing Chinese property market into new balance where it is we have commercial and plus public. Okay. So housing new starts also leads manufacturer inventory cycle by 12 months. Is that coincidental? No. Energy, ODI-driven export plus public housing will be the most important driver for Chinese manufacturing restocking. And also, if you have time, if you overlay copper prices, aluminum prices with Chinese manufacturer inventory cycle, you see this great correlation. Okay, so, well, back to our conclusion. We see this year is the first year since 2021, China will come off from a fiscal austerity. This is very important. Second is that Chinese manufacturer has already reinvented itself through massive government investment in the upstream energy infrastructure. You can think about that as a subsidy to Chinese manufacturer. As a result, the Chinese manufacturer has upgraded from labor intensive to energy intensive. So also they have been supported by this cheap financing from Chinese household, excessive saving, 26% above a pre-COVID trend, right? So they can only increase their capacity, and fundamentally, they need to find new markets. Chinese ODI and RMB as a new financing tool have provided the venue for Chinese companies, manufacturers to go abroad. And the government's investment in overseas infrastructure and manufacture also created more demand for Chinese export. So energy, ODI-driven export, and public housing will be the most important theme for Chinese growth in the next 3 to 5 years. So I'll stop here. Thank you so much.
Thank you for that fascinating presentation. Now we move to the first of our company presentations. Steppe Gold is Mongolia's premier precious metals company via its ATO gold mine. Executive Vice President and Director Aneel Waraich is here to tell you about the company and its expansion plans.
Mongolia-focused Steppe Gold is merging with Burrow Gold to create the leading and largest gold producer in the country. Burrow Gold produces over 60,000 ounces annually and has an expected mine life beyond 2030 with strong operating margins. On the completion of the acquisition, total production is expected to triple to 90,000 ounces within 2 years and over 160,000 ounces per annum by 2026 as Steppe Gold's ATO Phase 2 expansion comes on stream. Steppe Gold built ATO Gold Mine in its home country, from development to production within 2 years, and reached the 100,000 ounces production milestone in 2023. With the Phase 1 oxide project in production, the company is now moving forward with Phase 2 expansion as the landmark financing of $150 million and EPC contract are in place. Phase 2 expansion will have annual production of over 100,000 ounces of gold equivalent per annum by the end of 2025. And the ATO mine is expected to generate $2.2 billion in total. Steppe Gold also owns 80% of Udamhundi, a highly prospective exploration project in Western Mongolia, with plans for further acquisitions and explorations. With the committed ATO Phase 2 expansion, the company has a near-term production target of 200,000 ounces of gold equivalent per annum, backed by strong local support and social license, and now a strong financial base. Steppe Gold is well placed to build a mid-tier gold producer and create sustainable value for all stakeholders and partners.
Hi, everyone. Great to be back a year later. As you can see, we've been quite busy. I think that video did a good job of the presentation. So any questions? No, I'll get into it. But certainly, we've been very busy over the last 12 months since I presented here at last year's event as well. We closed a $150 million debt financing, which allows us to be fully funded for our expansion. That's already underway. Construction already started. And now we're in the process of acquiring another operating mine in Mongolia. So we'll have 2 production centers, taking our production run rate in Q3 this year to about 90,000 ounces per annum at about $1,000 all-in cost. And in 2026, when our sulfide expansion comes online, we'll be producing about 160,000 ounces at just under $1,000 all-in cost. So lots of growth in cash flow, in our production profile, and more importantly, we're funded. So really quickly on this acquisition that we highlighted in the video, we're acquiring a private company called Burrow and all of their assets in Mongolia. This is a former Centerra asset, just like our ATO project. Centerra had this operation running pretty significantly bigger than it is today, about 220,000 ounces per annum for 12, 15 years. This mine was restarted about 3 years ago, and it's been in production profitably since then, with another 6 to 7 years of mine life on top at about 60,000 ounces per annum. So we're paying about 2 times free cash flow for this acquisition that immediately gives us scale and relevance in the market. Instead of being just a 30,000 ounce producer for the next 2 years, we now have more cash flow and more size and relevance in the market, and jumping up pretty quickly to 160,000 ounces. Arguably, 160,000 ounces of production at around $1,000 all-in cost is no different than over 200,000 ounces at $1,200 to $1,400 all-in cost like our peers. So we will have that scale and relevance that I think is very important. For those of you who aren't familiar with Mongolia, why Mongolia? Mongolia is world-class, home to world-class assets and discoveries like the Oyu Tolgoi mine that Rio Tinto operates. It's relatively underexplored and resource-rich, so only about 1% of the country has been explored today. Yet you have one of the biggest copper mines in the world in production and expanding that Rio Tinto now consolidates. We believe there's many opportunities for new discoveries, both in copper and in precious metals. And Steppe Gold really wants to be the leading champion as we now become the largest gold producer from primary sources. So really quickly, just a timeline of where we started and kind of where we're going. We started this company at the end of 2016. 3 individuals with no money and no assets. In 2017, we acquired our first 2 assets. One of them from Centerra Gold for $20 million US. That's the ATO project you see that's in production. So it's a greenfield project, 1.2 million ounces of resources, inclusive of 210,000 ounces of reserves. Today, with drilling only down to about 350 to 400 meters, depending on the deposit, we're at 1.7 million ounces of gold equivalent reserves, with just under 2.5 million ounces in resources. So we've grown this asset significantly, and it still remains open below 350 and 400 meters. So the 12 years of mine life that will come online in 2026 will most probably look like a 15 to 20 year mine life when all said and done. We have a fairly tight structure here as a company, very strong alignment with board and management, owning close to 20% of this company. We've been public for just under 6 years and have never sold a share and have bought more when we're able to. We have large blue chip investors, including Fidelity Investments, legendary mining investor, Eric Sprott, who owns 9% of our company. We have Lim Advisors out of Hong Kong and Elliott and Triple Flag out of New York and Canada. So very strong long-term shareholders who unfortunately have paid a lot higher than today's share price, but that's just the market we live in. But that's certainly an opportunity for new investors. So as you saw from the video, we actually will have 3 assets in country today, with the ATO gold mine that you've seen in the video that's operating today, has been in production since April 2020, producing from the oxide mine that's in the far northeast of the country. The Buru Gold Complex that we're in the middle of acquiring, that will close in June of this year, which is more central in the country, 120 kilometers north of Ulaanbaatar. We're buying an operating heap leach, a CIL plant, and a fleet. And approximately 13 licenses come with this package. So there will be opportunity, we think, to create some more satellite deposits that can be brought into the Buru complex down the road. And then, of course, the Udumhundi project, UK for short, in the southwest in Bayan Hungar province. A very exciting new gold district where another peer of ours, Erdene Resources, has had a lot of success in delineating over 1 million ounces between their 2 licenses. And we're smack in the middle, which I'll show later. But as you can see, this is a very shallow open pit, three pits, or our oxide mine that's been in production since April 2020, down to about 40 meters. So this will run for the next 2 years if we don't find any more oxides on our property. So we are starting a shallow drill program, hundreds of holes across 90% of the mining license that we're not really on today, with the hope over the next 2 years to find more oxides where you already have the plant, everything paid for. It's obviously very cheap ounces to be able to extend that oxide mine life. So that extension of oxides, if we are, lucky and find more deposits, will actually increase our production profile to closer to 200,000 ounces. So we're not including the oxide mine in our 160,000 ounces of production coming online in 2026. As you can see, there's not really any vegetation or anyone around, so it doesn't get any easier to build a mine in a complex like this, where you're not disturbing anyone. As I mentioned, we've only drilled down to about 400 meters, the Mung deposit being the most deepest we've drilled so far, and all 4 deposits remain open. So we are finding new discoveries and extensions below the current mine plan and the feasibility study and the resources and reserves that are currently on our book. So that's very exciting. We're seeing a path even on the base metals, high-grade base metal hits underneath, and of course more precious metals as well. So we truly believe this will be a 3 to 5 million ounce deposit without any new discoveries of satellite deposits on this property, with just these 4 deposits. So phase 2 expansion is fully funded. The $150 million US we received last summer in funding, we've already drawn down about $10 million. We'll have another draw probably next month. Shows further progress of the construction for phase 2. We've actually already procured the fixed crushing circuit for phase 2. So it really is a project that is underway. And now having that capital allows us to be fully funded without having to dilute our shareholders. Given the state of the gold equity markets, having to being able to mitigate that dilution is a big win for ourselves and our shareholders by putting together an equity-friendly project financing package. So that was a big win for ourselves. You can see the progress is continuing. We have an EPC partner, everything's turnkey, and this is a big year for construction for us. The Udumhundi project is an early stage project for us. This is in the southwest of the country, as I mentioned, in Bayan Hunger province. 14,400 hectares. Exploration license we also acquired in 2017 when we were a private company. So we're the gold outline there, licensed there with 4 targets identified. What's really exciting is our peers in the blue licenses adjoining our license to the north and south. Erdene Resources have already delineated over 1 million ounces, and I think they say they're tracking towards 2. So we're certainly in the right area. This could be another area for consolidation, for delineation of obviously a resource and step by step get to a period where we can actually build something down here, just like we did in Dornod province. We now employ 350 local Mongolians. We're doubling that workforce over the next 2 years with our expansion, and then we hope to replicate something similar down here in Bayan Hunger province, where even at surface we've seen some encouraging results. 1.5 grams gold, 450 grams silver, 3% copper, 4% lead. So very encouraging results from this project. And there is room for more consolidation, and this could become our 3rd operation. The goal for Steppe Gold is to be Mongolia focused, where we have an edge. We're local, very local, of course, 99% local, so we can't get much better than that. And where we have strong support locally, provincially, federally. We've been paying taxes now and royalties for a few years. We've educated, we've hired, we've upskilled. We're very well liked, I would say, endorsed, and we want to take advantage of this. In a country that has still a lot of opportunity, and maybe down the road we can bring on mine number 3 or 4 online. So ESG, I think everyone talks about it. That's something you shouldn't be required by investors. Something how you should run your business anyways from day one. If you want to be a successful miner in any jurisdiction, you need to have this in place already. Last but not least, we actually have another project we acquired last year, a 2.5 million ounce deposit in Peru as part of our diversification strategy last year. We're actually selling this asset now, given that we're buying another mine, and we have our hands full with our current operations and expansion in Mongolia. So this will be a win for investors to be able to monetize this and strengthen our balance sheet further, besides buying the producing and cash flow generating Buru mine in Q2 of this year. That's really the Steppe story. Obviously, over the next 12 months, we're integrating the Buru. There's obviously industrial logic there, natural synergies between having 2 operating mines, 1 corporate overlay. There'll be savings there, certainly, that we extract. There's upside there on the package of assets that we're receiving, where I think there'll be some other satellite opportunities to truck over to Buru at some point in the future. And of course, our expansion will continue to update the market on construction, installations, drawing of that debt facility on our phase 2 expansion to show that it's truly moving forward. So quite exciting 12 months ahead, and it's been quite a very active and exciting last 12 months as well. So it's great to be back here at the Gold Rush event. Thanks for taking the time to hear the Steppe Gold story. Thank you.
Thank you, Aneel. Next up, we'll hear from GBM Resources. Edward Jelcich-Kane is an exploration geologist who has worked both globally in both gold and base metals. He recognised GBM's Drummond Basin gold projects as some of the most prospective gold ground in Australia. Please welcome Edward to tell you more.
I'm up here today because honestly these deposits came across my desk, and the first thing is this is too good to be true. The second was, how can I get involved in this? GBM Resources is way undervalued compared to its peers. It's more than 5 times discounted compared to it was in 2021 and way below every other peer in on the ASX. Our first hope is to re-rate to where we were, and then through discovery, sort of reach the heights of where Spartan Resources is. As an exploration geologist, discovery is our main focus. 90% of our resources are on existing MLs, 60% of that is in measured and indicated, and we already have 1.84 million ounces of gold at a decent grade. The best thing is the grade increases with depth. As you know, on the ASX and throughout the world, sort of gold juniors have been slammed. The gold price is on the way up, and we're still sort of in the doldrums. It's our job as an exploration company to sort of bridge that gap and make discoveries and sort of honor our word to the market. We have a strong shareholder base that is backing our next phase. So the company's main focus now is within the Drummond Basin. Between Charters Towers and the Drummond Basin, more than 44 million ounces of gold have been in past and present resources. Within the Drummond alone, there's about 8 million ounces. Only Kalgoorlie and perhaps the Victorian goldfields rival this, yet there is little to no excitement in this region. Australia's second stock exchange was opened up in Charters Towers based off the amount of gold they found. Within 5 kilometres of the 2 deposits, there's a rail line to the coast, and Pajingo lies about 50 k's north of us within the Drummond Basin and is the sort of highlight of the Drummond Basin. They have around 5 million ounces, and as you can see, the grades are second to none. 500,000 tonnes at 15 grams per tonne is one example. Before they found Nancy and Vera, they were sort of sub-economical, but upon discovering these 2 resources at depth, things really flew, and this is what we hope to emulate at GBM. Newmont is in a joint venture on one of our tenements, Mount Coolin, and they've already spent $7.5 million for a 51% farm-in, and they hope to be drilling in the first half of this year. As you can see, GBM's grown the resource base by around 500% in the past few years. This is based off pulling together historical work, drill holes, and really understanding the geology. The next aim for us is to get this to 3 million ounces as quickly as we can. The first deposit I'm going to talk about is, for me, probably the most exciting. With epithermal gold systems, you can really understand where you're at based on the veining and the alteration. The first thing that's clear is there's sinter on surface, and this is an eruption breccia. So we're very high up in the system, and the goods should be at depth. Some of these intercepts are something that would make the Western Australian gold sector's mouthwater. 54 meters at 4.63, and that's at the bottom of this deposit. Other intersections, 46 meters at 5.5, and they go on and on. It's an extremely exciting deposit, and this is only constrained by the lack of drilling. Obviously, the next step is to go ahead and drill it. The presence of fluorite within the deposit suggests we're quite close to the source intrusive, and I'll get on to that later. So south of 309 are 2 resistivity targets. You can see that the deposit itself is defined by a resistivity target due to the silica alteration, and to the south there are 2 large targets. Walking the ground above this, there's sinter and silicification on surface. There's golden soils and there's also golden drilling, but no drill holes adequately tested these. The next step is to pull the geophysics together, perhaps do some more geophysics, and drill these targets. One thing is, sometimes deposits are bigger than they should be, But for me, this is a small part of a bigger epithermal system. And it has me extremely excited. And seeing this is what got me involved. Already in 2007, a company put a decline down to 170 meters. So there's access to the high-grade ore already. Unfortunately, with the GFC, they ran into problems and it closed down. The second deposit I'd like to talk to you about is Lone Sister. It's 6 kilometers south of 309, which we just looked at. It's actually hosted in the intrusive itself. So it's deeper down in the system, and it's possibly what is sitting below the previous deposit we just looked at. The IP conductivity, which represents sulfides, shows that there's a possible alteration up to the northwest, and we hope to follow that. Again, there is just no drilling at depth, and if you look at it in 3D, you can just see a big tube of which to drill around 60 meters wide. Some of these grades in here, 37 meters at 36.5 grams per ton, 20 meters at 4.32 at the base of the deposit, just get any geologist excited. Wonder what's down there. So there's a corridor around 10 kilometers long with sort of hydrothermal alteration, gold anomalism all the way along it. There's 2 resources there which we hope to build upon and grow. And that is our priority. Our next priority is to build a series of prospects up that we can drill in the near future. The last of the 3 resources is Yandan deposit, which sits around 50 kilometers to the northeast. Yandan is a more classic epithermal vein system, but again, it looks like we're at the top of the system. 400,000 ounces of gold have already been pulled out of this deposit by 2 companies in the shallow oxide material. The project has had little to no love since then, and recent work by GBM drilling underneath this vein system has shown that there's actually a repeat sequence of what's above. Previously, the generator fault was seen as the feeder structure, whereas it's clear that it's a post-mineral structure. Within the drill hole that drilled under, there were vein clasts within a breccia, epithermal vein clasts that were assaying around 3.69 grams per ton. This had the company extremely excited, and work by previous geologists, excellent work, has shown that there's a genuine drill target down there. PacGold, you saw the resources earlier, sort of 500,000 ounces at 14 grams per ton. Look, that's the target we're going to go for. This requires, I guess, further geological work and a bit of geophysics, and then we'll go drill this, possibly with shallow angle drill holes getting under this. At the base of this, which we see as the top of the feeder structure, is 43.5 meters at 14 grams per ton. We can clearly see the grade is increasing with depth and also in thickness. Porgera, Zone 7 made it fly. Waihi, the Favona vein, and Nancy and Vera at PacGold. This is the prize on an epithermal gold system. Since the 1990s, little to no work has been done on these systems, or quality work, when companies like WMC, CRA were really targeting epithermal systems throughout Australia and the Pacific. So there's a great opportunity here to expand each of these 3 resources. Furthermore, as a hydrothermal system goes, this is a large system. It's around 1 square kilometer in size. Past and present resources of around 900,000 ounces, 500,000 ounces currently in the ground still. And we have a clear strategy of which to target. You can see comparisons with equal scale to Favona and PacGold and what may lie down below. Further afield in Yandan, very little work's been done. There's a target called intrusive related gold, which typically sits in these magnetic lows, which represent felsic intrusives. This is a real bulk tonnage target and something I guess I get excited for because I'm an exploration geologist. But within these, there's gold anomalism within the soils, and again, they haven't been drilled. Further work needs to be done. Currently, we're reprocessing all the geophysics, doing 3D inversions, and trying to figure out what's happening here. So with those, so with these 3 deposits, if we get one to fire, we see it as a company maker. That extra 500,000 ounces on any one of these would be fantastic, and we have 3 shots at it. But all of them are fully open, and it's not, you know, sometimes you say it's fully open, but it's not. These are genuinely fully open and just restricted by the lack of drilling. You can see the grades speak for themselves, and it's for us to deliver on what we say we're going to do and go drill some high-grade gold intercepts. The company itself has 3 other assets. All the ground surrounding Mount Morgan, which is traditionally a 7.7 million ounce deposit. Cloncurry Copper, which surrounds Ernest Henry, which is a world-class copper gold deposit, and White Dam Gold Mine, which actually where I worked on my first job, which has a processing plant that's still running today. The company is looking to divest these non-core assets while sort of retaining upside in them. The ground the company has is all excellent, but the Drummond Basin gold projects are, for me, next level and some of the best gold ground in Australia. They've been neglected for 25 years, and we hope to sort of turn that around and really make some discoveries there. That's all. Thank you.
We're actually running way ahead. Oh, Edward, if you can stick around for a second. We're running well ahead of time. So I was just going to ask you, how much drilling have you got planned for the rest of this year?
The truth is there's a lot of data compilation that needs to be done. There's 30, 40 years of historical data. A lot of work needs to be done on pulling those drilling databases together, the soils. Currently, Dave McGuinness is redoing the geophysics, so 3D inversions, and really squeezing as much as we can out of that, because you're not going to drill before you know everything about what you're drilling. Otherwise, for me, you're wasting your time. There's tens of millions of dollars of IP data that run through the whole tenement. I was shocked at how much there was. There's EM, there's high resolution magnetics, so we're sort of going through that. There's also interest from majors on the tenements, so we're sort of keeping them at bay because honestly, we want to explore it ourselves.
Thanks, Edward.
No worries.
We are running ahead of schedule at the moment, but we are going to take a short break. We will reconvene in here at 5 p.m. So stretch your legs, grab some water, and we'll see you back then at 5 p.m. sharp. Thanks. into it. Gavin Chan, General Manager for SRK Hong Kong and a Principal Geologist, has some 20 years of expertise in project due diligence, valuation, fatal flaw analysis, and independent technical review, covering a wide range of commodities and jurisdictions. To give us his views, please welcome Gavin to the stage.
Thank you. It's certainly a pleasure to be in Singapore again. We are the sponsor for the Singapore Mining Club Gold Rush event today, and also a sponsor for the conference the next few days. So today I'm going to bring you a project which we have done recently together with a client, how we apply not just traditional method for exploration targeting, and how we use AI for exploration targeting. Okay, next one. So I'm based in the Hong Kong office, and I'm joined by my colleagues from other offices as well today. So we got Erhan from MRT, Alex from Beijing, Kyle and James from Australia. So James is going to give a presentation of critical minerals tomorrow, so please don't miss his talk tomorrow. Most of my work are related to project evaluation and validation, So instead of talking about project review, I'm going to present a case study done recently by my colleagues, mostly from Australia and North America, together with a client, BHP, and also a working partner, Deep IQ, based in North America. So thanks, BHP, for allowing us to give this presentation today. As we all know, it's getting much difficult to get surface easy target to meet the growing demands for minerals. So we have to, instead of using like only traditional method for exploration targeting, we have to think about more innovative way to find the next deposit. So using machine learning will be one of the ways to help us to be a much better way to find the next mineralization. So where's the next target? So let me give you a quick overview about what's the exploration targeting. As a geologist like myself, when I first started my career, I spent weeks or months mapping in Africa, Australia, a lot of random places. Geologists try to gather a wide range of information to help us look for potential target for mineralization. We just don't put random holes in the ground. We have to think in a logical way where the most targets are. So depending on scale, perhaps to start with, if I want to look at to find a potential target original gold target in Western Australia, I have to first start to gather information in region scale, including the geology, geophysics, and other available information, plus some historical information. Try to put things together and locate the hotspot area. And then we move to like the tenement scale, district scale. We further drill down, what's the target you really want? What is the exploration model? We try to see what are the most important factors to control the mineralization. And then the next step is, like the presentations given earlier, companies put down holes and try to test the exploration target, so down the prospect scale. And the subset of exploration target is there are known target, there are known mineralization. We know what are the controlling factors for those mineralization, and then we see whether we can find a similar deposit along strike of that of existing deposit, or in an area in the vicinity of the known mineralization, and see whether we can find a similar deposit. So that's what we call a brownfield exploration. So traditionally, what's the traditional way to look for to do the exploration targeting? First of all, you have to pull out geological maps, have an exploration model, what are the controlling factors, and then combining other information such as like gravity, magnetics, and then the geologist or the alchemist or magician will put a couple holes or a couple of circles on the maps and tell you, well, that's the most likely place you can find a deposit. But that might have bias in there. It might be quite subjective. Are there any other ways we can do this? Can we do it better? Yes, there are. So that's something we call prospectivity analysis. There are two different ways to do prospectivity analysis. The first one is what we call knowledge-driven. The second one is data-driven. So what's prospectivity analysis? Prospectivity analysis is a predictive method. We try to put all the data together and then translate them into grid. And for each grid of the layers, we assign a value to them. Put a very simple term, we assign a value to them. And then ultimately, we want to produce a map like on the right-hand side, the mineral potential map, to highlight those areas which have the most prospective areas. So again, like on the left-hand side, that's the usual information we try to get before we do the exploration targeting. The geology, what is the geological structure which control the mineralization, satellite imagery, magnetics, other geophysical data. And the core of the whole thing is where the core of the whole thing is the exploration model. It is porphyry copper, what is the alteration, what's controlling structure. And we put them together and we assign a value to them, applying some not very sophisticated, but some statistical model together and produce a map like on the lower right-hand, the corner in the right, so prospectivity map. So that's the knowledge-driven approach. You need a geologist to assign value to each grid of the layer. The second approach is what we call a data approach. So in a known area, again, you got input data. The data are such as like, again, the geology, geophysics, alteration, are data. You got input data. And there are also known mineralization. So there are target there. So now you got input data, there are known target, and you use this data to train the machine. Let the machine establish a relationship between input data and output and the target. And of course, there are different algorithms you can use to try to establish relationship. So in this slide, I'll just put everything together. So there are known target, there are training data, the red dots are the known target, and there are wide range of input data. And we use different learning algorithms, such as like random forests, deep learning, and train the machine. And ask the machine the question, are there any more target? There might be more target. There might be more target where undercover geologists overlooked in the past. So let me share with you one of the case studies done by my colleagues in Australia and North America. This is a year-long study with BHP and also our working partner, Deep IQ, based in North America. So we went through 3 phases. The first phase, again, we have to go through the proof of concept. So we have to define the exploration model. That's a very important step. And we gather all the data together. But the most time-consuming process is to clean the data, put the data in the right format, and did the interpretation as well. And the phase 2, we took miles and miles ahead. We convert from 2D to 3D, and we model everything 8 kilometers down from surface. In the final phase, we generate a number of targets and also very sophisticated regional geological model as well, and leave that to BHP to do a more follow-up work. So that's a workflow, a bit messy, but the way we did was we ran the knowledge-driven and data-driven approach in parallel. We want to check whether results from machine learning, whether it would correlate with the knowledge-driven result. We want to validate that. So that's the input data. Again, we got a wide range of data. We got the geological maps. We've got geological information, lithology, structure, satellite imagery, alteration mapping result, geochemistry, and so forth. The geochemistry result somehow it's a bit difficult to use because it's not uniform result, that insufficient data. So we use that as a confirmatory data instead. So that's the initial stage. So we put all the data together. So once our data, we went through the knowledge-driven process, and as our data, we trained the machine to use a data-driven process. So these are the examples, some of the input data. So the geologic structures, the ISO patch, and also the magnetics, that these are some of the input data we use. Topography, and quite important is some of the hydrothermal alteration pattern as well. And I forgot to mention, what we try to look for is porphyry copper. So to us, structure is very important, alteration, gravity, EM are quite important. So these are data we use for the phase 1 2D modeling. So that's the status of phase 2. So we convert everything from 2D to 3D. That's a very time-consuming exercise. But in this process, we managed to check against like the interpretation, whether we did right or wrong, and also whether everything matched to each other, and some inversion modeling for geophysics. And we put everything in a 3D block model. The resolution of each block is about 200 meters by 200 meters. So a lot of variables we define. There are more than 50 targeting criteria we define. So these are some examples we define through the process. Again, payload depth, alteration, proximity to fault. We feel that quite important. So these are the output. So on the left-hand side is the result from the knowledge-driven. So we use fuzzy logic to define the target. So the hot color area are the target areas. And on the right-hand side, that's a result of machine learning. Do they look similar? To me, they look quite similar. So the correlation is not too bad. We use the knowledge-driven result to try to validate the machine learning result. It's not just you put random data in and you can't validate. We ran in parallel and see what the result are like. It's not as simple as that. We try different combinations as well. We use different algorithms and see whether we can get a better result. And also we merge a number of data sets together, because some of the known minimization in the first pass analysis, some of the minimization didn't show up in the machine learning result. So we tried different combinations and see whether we can capture everything together. So that's the fusion model we got finally, and that's the fuzzy logic result. So in a nutshell, geologists, are we going to lose our jobs tomorrow? I don't think so. For this exercise, it's quite apparent that it has to be a combination of knowledge of it's a combination of the knowledge approach and data approach. We have to combine two things together. But at the same time, machine learning is quite useful in the way that it can process a lot of data in a very short period of time. And also, some of the bias, maybe by geologists, do not appear in the machine learning process. So some of the hidden targets are shown in the machine learning result. So as to us, this is really one of the ways forward in terms of exploration targeting. Perhaps if you're going to do like a regional exploration targeting in the future, machine learning can shorten, can help you to, save you a lot of time. It can digest a lot of data together and try to work out the relationship between some hidden relationship in the data. But if you have to do like this kind of brownfield exploration, it's not a simple process. You have to take a lot of time to clean the data, put the data in the right format, and test different models to try to work out the relationship. So overall, we think that applying machine learning would be a very good way to go forward and to help to define the next deposit. So thank you very much. this.
Thank you. Next up, we'll hear from PacGold, which is a dynamic gold exploration and development venture in North Queensland. Tony Schreck, Managing Director, will expand on PacGold's project and why the company has attracted such high-quality institutional investment.
Very much, Christy, and thank you very much to the Singapore Mining Club for today's event, and also thank you everyone for your time this afternoon. So PacGold, we're a relatively fresh story. We actually IPO'd on the ASX just over 2 years ago, and on the back of a high-grade gold discovery, we've had some really good growth in the company. You can see the location of the project up there. We're located in far north Queensland, and there's quite a number of large operating profitable gold mines in that part of the world. And there's been about 40 million ounces of gold has come out of North Queensland. So it's quite an attractive location to explore for gold. So for PacGold, in the last 2.5 years, we've actually made multiple high-grade gold discoveries on our project, and the central target has been where those majority of those discoveries have been made. And also importantly, these high-grade gold numbers are actually coming out of granted mining leases. So that's actually sort of provides us with an option to fast track towards development as we move forward. So on the central target, the work that we've done, we've extended the mineralisation down over 500 metres, and we can now define it over 1.5 kilometres of strike. You can see some of the high-grade intersections that we've achieved on the project to date. 24 metres at 8 grams gold, 14, just under 15 metres at just over 10 grams gold. There's actually been high-grade open pit mining here. It occurred in the late 90s, and they produced about 30,000 ounces at just over 5.5 grams gold. And then as we expand sort of from that central target, the southern target is almost immediately next door, and we see that as a potential repetition of the central target. And you can see some of the historical intersections from that southern target, 8 metres at 55 grams gold, some incredible high grades. So now what we've learnt from the central and that southern target, we can now apply that to a district scale, and we're using really innovative exploration, and it's being really successful, and it really highlights that we've actually identified a whole new gold district in North Queensland. So we've got a big year ahead of us for 2024 with quite a lot of drilling planned, and also preparing for a maiden resource later this year. Just a snapshot on the corporate overview. We're really well funded with $3.2 million in cash at the end of December, but we've got a really tight capital structure. You can see 84 million shares out there. That's a really tight number. But our institutional backing, we're really proud of the institutional support that we've attracted to the register, and those guys they're all attracted to they share the same vision that we do, that we're onto a whole new gold district that hasn't been recognised before, and that the initial high-grade discoveries that we've made are just the beginning, and that we've got quite substantial scope to expand that significantly. So you can see 28% resource capital funds, Acorn, Tribeca and Argonaut, two of the sponsors of the conference. Lowell Fund, Curious Capital, they're really supportive institutional investors there. Just an overview of the project. That photograph on the left there, that shows you can see the open pit mine there in the centre right of that photograph. We've got great access to the project. There's a main road that's serviced by the local council, and we've actually got an operating airstrip there as well. But what's really driven our success is being the first on this. We're the first modern exploration. There's been almost no exploration in 20 to 30 years on this project. We're also the first to apply a new geology model, and that's been really successful for us, and it's enabled us to go deeper with confidence, and that's what's discovered the high-grade zones. But also importantly, we're also the first company to ever apply IP geophysics on this project. And that leads me to that figure on the right there. So that figure on the right, from the top left to the bottom right is 30 kilometres. And you can see the image here, the blue and the purple is mapping out a resistivity low. And that's what maps out the alteration that hosts the gold mineralisation. So as I mentioned, we're the first company to ever apply this geophysics, and it's been an absolute game changer. The majority of this area is under shallow sand cover. So using the geophysics enables us to map out where these important gold structures are located, and then we can really focus in our drilling with targeted programs. So you can see the central target. Now that's where our drilling is focused to date, and that's where most of the high-grade discoveries we've made to date are from. But there's the southern target with historical numbers of 855. And you can see that this main fault zone is very, very extensive. And as I mentioned, it's almost entirely concealed by shallow sand cover. And you can see that sand cover in the photos here. That's all the white areas is the shallow sand cover. This is another image of the IP geophysics, and we're looking at 10 kilometres from the top to the bottom here in this image. And each one of these images is sections of the IP data. So we're looking at it obliquely in 3D, looking to the north there. And again, the blue and the purple is mapping out the main target structure that hosts the gold mineralisation. And you can see how clearly we map it out in 3 dimensions over very large distance. This image on the right here, this is one of those IP sections. This particular section is located 50 metres south of the open pit mine, which is located just in here. And back in the 1990s, when they were operating the mine, they drilled a hole and it intersected 2 metres at 0.1 gold, which is not significant. And they concluded back then that the mineralisation was actually finished sort of south of the open pit. But the work we've done with our model that suggests go deeper, and the geophysics particularly, it gave us encouragement to go deeper, and that's exactly what we did. And you can see from that 2 metres at 0.1, we drilled a hole and hit 8 metres at 0.6, but then we stepped back and we hit 26 metres at 3.6. And then with confidence, we stood back again and intersected 17 metres at 9.3. So the geophysics has been given us some really good, strong confidence to go deeper along with our model. So a big part of this story here is that as we progress deeper, we're seeing the tops of the high-grade systems which are developing at depth. This image on the left here is a plan image through the main central target area. And you can see the blue is again that resistivity low, which is mapping out the main alteration zone. There's the location of the open pit there. So our focus has been on the eastern margin of that resistivity geophysics low, and that's where the majority of the high-grade intersections have been made to date. But we've drilled one hole on the western margin, and the very first hole has hit a metre at 40 grams. So while we've focused on the eastern margin, the western margin is looking just as prospective, but we haven't drilled enough holes yet to determine. There's a cross section through the open pit area. So this section is 520 metres vertical, and you can see how consistent the mineralisation is from beneath the open pit, extending down 500 metres. The deepest hole we've drilled is 500 metres below surface. It intersected 4 metres at 10 grams, and the mineralisation is completely open in every direction. We'll look at a long section next that extends through this main zone. So this long section on the left-hand side there, you can see the open pit in the centre upper part. The left to right on that figure is about 1.5 kilometres, and that extends 520 metres vertical, that figure. The purple, you can see that the black dashed line up through here, and that was the limit of the historical drilling when we took this project over and when we IPO'd. And you can see by applying our model to go deeper, you can see how successful that's been for us. So you can see as we've progressed deeper, we've been intersecting multiple new high-grade zones. So when you look back, the open pit was purely just the tops of one of those high-grade fingers. And as we're going deeper, we're seeing more of those. And that's an important part of our geological model, which has been successful. So that everything's completely open, sort of at depth and to the north and to the south. But you can also see that the drilling we've completed to date is very wide spaced. So we're stepping out sort of 100 to 200 metres at a time, and we're seeing some excellent continuity in the high-grade gold. This long section here, this is a stepping back. So this long section here is that previous long section I just shown, and it now extends down as far as the southern target. So from left to right on this figure is 3.8 kilometres. So you can see the areas in between, the areas in white here, there's just no drilling. And that's the geophysics that we've completed shows that the entire system is connected on a very large scale. So you can see that the focus has been on the central target and drilling deeper, and it's been quite successful. And part of our strategy moving forward is to replicate that on this southern target to expand the gold to depth. And if the model's correct, which we think it should be, that we should see more of these high-grade zones developing as we progress to depth. So the geophysics suggests that to the left of this figure and to the right of this figure for many, many kilometres, the geophysics shows that the structure continues, and it's just concealed by shallow sand that has masked the previous exploration. But for us now, with the geophysics, we can go in there with targeted drilling to be more successful. So you can see the central and the southern target that we've just been talking about. Now I'll move on to the Posey, the northern target, and Victoria. And these are both great examples of how we've stepped out with our exploration in the last 6 months. And it's been incredibly successful to the point now that we can confidently say that those blue zones that you see in the geophysics are mineralised. It's just that they're concealed by shallow cover and never been drilled before. So this is the Posey prospect up in the northwest. That image on the left-hand side there, that's IP geophysics. Again, the main corridor that we think is interesting is 2 kilometres running up through there. These yellow outlines here is where there was high-grade colluvial gold was mined in the 1990s. And it was just a high-grade quartz gravel that they mined the top 1.5 metres. And some incredible grades came out of there. I mean, some of the trenching that was completed, the trench through here went 46 metres at 7.5 grams. And that's just the quartz gravel that was 1 metre below surface. So for us, we're the first modern company to do any exploration here. There's been no work here for over 30 years. So we've come in here, we've rock chip sampled it, demonstrated some high-grade mineralisation, and we've just completed the first drill program that's been completed in modern times here. And you can see that figure on the right there shows a section of the IP geophysics. And again, you can see that blue zone extending to depth. And that's the main alteration zone that hosts the mineralisation. So again, you can see that we've intersected a number of new zones of gold mineralisation that support this geophysics, but importantly show a wide structure that's never been tested. So this is one example of the regional exploration, and this is part of a sort of a parallel structure that we're seeing here. This is the northern target. So we're stepping out, there's the open pit mine located in here. We're stepping out, you can see the blue structure running to the north here. Our drilling is really focused down in this area through here. And we've stepped out 3 kilometres with a single RC drill hole. And we completed that a few months ago, and it's all completely under sand cover, this structure, but with one single drill hole, we intersected a broad zone of, it was low-grade gold, 22 metres at 0.2 grams gold. But what it shows us is the geophysics is a remarkable targeting tool for us, and this then supports us drilling deeper as we progress down into the system. So there's a lot more work planned for this northern target, specifically a lot of bedrock drilling over this entire structure that's never been drilled before, and then follow up immediately with further drilling to define the gold zones. Just moving to the south now, so there's the southern target there, this Victoria zone. It's the continuation of this blue zone to the south here. You can see here then that's the geophysics again. So we've come in here with just the very first past exploration. This entire zone is under shallow sand cover, and we've come in here with just shallow orientation bedrock drilling, and we hit gold in both lines. But what it shows us is that gives us confidence that this structure is live over a very large distance. And then what we're really excited about is that this structure continues undercover for many kilometres. And it's the scale of these structures is what's attracted the high quality institutional investors that we have on board with on their register. Just looking at the board, we've got experience from sort of a lot of discovery experience, project financing right through to mine development. So we're skilled. I mean, we're particularly skilled at this sort of discovery phase at the moment. Myself, I'm a geologist. Jeff Lowe, the exploration manager. We both used to work together in Newmont, and we know what big deposits look like. So just summing up, unlocking an entire gold corridor. This has really come about by applying modern exploration to a completely overlooked gold opportunity in quite a rich district of North Queensland. But first mover advantage, that's been key to it. As I mentioned, we're the first company to apply geophysics. It's the first modern exploration, and we're the first guys to understand the geology model, which has gave us confidence to go deeper in that system, and that's what's led to the high-grade zones. IP geophysics, again, has been an incredible targeting tool, and it will continue to be as we go forward. And high-quality institutional support, we can't do it without funding, and to have really high-quality, sticky investors is fantastic. So thank you very much for your time this afternoon, and thank you.
Thank you, Tony. Simon Lawson is the Managing Director of Spartan Resources, a remarkable high-grade gold discovery and corporate turnaround story in the Murchison district of Western Australia. Spartan is currently drilling and rapidly growing high-grade gold resources and reserves at its Never Never discovery, just 600 metres from its processing plant. Please welcome Simon to the stage to present the Spartan story.
Thank you, Christy. Hello, everyone. Thanks very much, firstly to Christy for welcoming me to the stage, but Stewie and Prue and the rest of the team for putting on the event, and the Singapore Mining Club for allowing me to speak today. As Christy mentioned, we are a bit of a turnaround story. This is something that I've made a bit of a career out of, which is taking broken resources, broken projects and fixing them. We are in Western Australia. That is what we're doing right now, which is drilling to fix ostensibly a process plant that didn't have enough gold in front of it. We're rapidly building that inventory of high-grade gold, having made a pretty substantial discovery fairly early on in my tenure there, and we've just set about expanding that. So very busy at the moment, 5 rigs on site. That is an open pit on the right-hand side that was not making money. There was a plant built just to the top left-hand corner of that slide that you can see there that's just waiting for some high-grade gold that we are defining right now. So just a little bit about the company, corporate slide. 965 million shares on issue, about 58 cents today, I think we closed. Market cap 560, well cashed up, so we're not out there looking for money at the moment. We are very busy. Solid instos on the board there. 47% of our shares are held by institutional investors. 2 major ones on the board at the moment, and 1832 Asset Management from North America. So We've got some really solid supportive shareholders there. They're very interested in what we're doing, obviously. I'm a geologist. I've spent most of my career drilling high-grade systems, and this is probably the best one I've seen. Just a bit of share price. I am skiting and showing off a little bit here, but since we raised 25 million bucks late last year, our share price has gone up 62% compared to the rest of the market. The gold index has obviously moved with the gold price, and gold producers have moved sort of 10 to 20%, but we have shot up over 60%. So we're doing pretty well against our peers, all of who are producers. At the moment, our plant is in care and maintenance. I'll just make that very clear. What we're trying to do is put together a very solid mine plan. That means when we turn that plant back on, which is less than 6 years old, we will produce sustainable, high-grade, high-profit, high-margin gold ounces. Mineral resources, the number that I like to point to there, even though 2.49 grams a tonne doesn't really get people's hearts racing, 1.7 million ounces in front of a plant that's already built should make people quite excited. But the very high-grade aspect of that, 5 million tonne, or over 5 million tonne at over 5.7 grams a tonne, and that grade is increasing with every drill hole, almost 1 million ounces, and we've outlined that in an 18-month period. We're very focused on just high grade. I mean, I walked into an asset that was very low grade, and there's only a couple of things you can do in that kind of situation, and it's either drop the costs or increase your grade, because that's where your revenue comes from. So we're located pretty much smack bang in the middle of the Midwest in WA, Western Australia, right next to Ramelius Resources, just south of Westgold and just north of Silver Lake. So we have some pretty big brother company in that area. We did grow from a 70 million market cap company to almost 600 million today. So we are rubbing shoulders with some of those bigger guys and having a lot of success. As Christy mentioned, 600 metres to our plant. You can't get much closer than that. I was a little bit concerned that the open pit that we were looking at was actually going to undercut the infrastructure, but no fear. The green ellipse there is the Never Never gold deposit. That's how close it is to this plant. The blue area there is the old Gilbey's open pit that wasn't making money. So that's how close we are. It is kind of incredible. The whole road that was being used to mine that, what was basically an uneconomic pit, was driving straight across the top of this high-grade discovery that we made in mid-2022. That plant is a 2.5 million tonne per annum plant. I'm certainly not going to try and put 2.5 million tonnes of rock in it a year. I'm going to make a solution for that plant that allows us to run a very high-grade, high-margin gold concentrate so that we can be insulated to all of those unexpected events, pandemics, drops in gold price, all kinds of things like that. So for me, I'm about building a company that's sustainable and can produce profitable outcomes for shareholders. So it might take a little bit to load. I'm going to try and get fancy pants with my 3D here. So this is just, I suppose, an overhead aerial image of our tenement package. This is really illustrate that we have a huge amount of ground, all granted exploration licenses and mining leases. Our main deposits are situated in the middle here along this strike. We have a process plant, as I said, that's sitting right here. So very, very close. And there's lots of room to grow. We put out an exploration target a couple of weeks ago, actually, just to really signal to the market where we think we can take this. We put an exploration target out last year after making this discovery, and we smashed that. We're now putting out guidance to get to 1.6 to 1.9 million ounces of high grade in front of this plant, and that will be a pretty substantial turnaround story at that point. Just sort of highlighting there, every 6 months we put out new resource updates, and every one of them has been positive, 200,000-300,000 ounces at very high grade. This is just to show the continuity of this ore body. Also have a bit of a laugh. That's the Burj Khalifa on the left-hand side there, an A380 for scale. So this is a giant system that we've discovered here in the middle of a goldfield system that was thought to be low grade. Every single one of the drill holes in here is incredibly high grade. I'll go through some of the sort of highlights right throughout this ore body, all the way from surface down to over 830 metres. We've been hitting visible gold and very high grade, thick intersections. Again, just getting fancy pants with my 3D. That's the Never Never open pit conceptual design at the moment. You can see how consistently we've been hitting this grade here. If I just spin that around, hopefully it doesn't drop out. That's the, as I said, open pit, the conceptual open pit. We discovered a low-grade surface halo and then followed it down, and you can see that it becomes very, very linear as you go down underground. So we're looking at this principally as an underground prospect because of its grade. You can see how consistent that is. It makes engineers very, very happy when they see that kind of angle. Some of the drill hits, you know, a lot of guys will stand up here and talk about the potential. You look at some of those drill hits. I challenge most gold producers in the world to produce those kind of consistent hits. They are crazy numbers. I've worked for Northern Star Resources, was probably my claim to fame for 6 years. We drilled some of the best high-grade deposits in Australia, and we looked at every other asset to try and buy it, and I never saw consistent hits like that. So this really is a bit of a unicorn deposit. But when you think about what excavation you're going to have to put in to take those ounces out and take them all, you're looking at really big high volume stopes that give you lots of tons to feed to that mill at very good grade. This is just to put it in long section. That's the ounces per vertical metre. Any engineers in the room will appreciate over 1,000 ounces per vertical metre is pretty good. That's where the first green dashed line is. We're sitting at an average of over 2,000 ounces per vertical metre at the moment, and that's high grade. We're not dragging in low grade stuff just to bump up that number. We will mine every stone of this deposit. That's the exploration target and the inferred indicated category there, just to give people an understanding of exactly how we work that out. It's pretty simple. Geos aren't particularly creative. We just take what we've seen before and incrementally increase it and work out whether that seems reasonable, and then drill it and make it happen. Never Never is just one of several high-grade structures in this area. What we did, I suppose, after chasing after this high-grade system for so long and now heading it over 800 metres below surface, we looked back at what Gilbey's, the uneconomic pit, was telling us, and there's a number of these geological structures in there that highlight that there are very high-grade chutes in that pit that were being mined as one consecutive ore body. Our geology model, and geologists will stand up here and tell you about their geology model. Our geology model is high grade. We are only focused on the high grade. We're not going to mine it as one continuous ore body. What we see here is separate high grade chutes. We're going to make an underground complex happen at Never, feed that mill, and we're going to bring these other high grade chutes in very shortly. Building suspense. So just to give you a little bit of a cartoon idea of what we're thinking here, Never Never's off to the left-hand side there, but what we're seeing is general trends that run straight down in this area here. This is actually quite wide, runs about that far apart. So we're drilling those areas right now. The big square on the right-hand side is West Winds, and I do love crayons, so I love a digital crayon. The Four Pillars prospect on the left-hand side, or just in the middle there, is right at the end of that pit. That was a really big realization for us. The reason that pit actually ended was because they lost the ore body, but what they did was hit the highest grade material they'd ever mined just before that pit terminated. So what that was telling people is that there are major structures that cut across the stratigraphy here and create high-grade plunging chutes, and we feel like we've cracked the code. Just around the corner, and I'll bring it back to plan view to show you where this is. This is literally less than 400 metres away from those other prospects I was talking about. This is a new one. Well, it's a new old one. We've just looked at it with different eyes, as we like to do. This is a high-grade plunging chute system. This was the highest grade prospect at Dalgaranga, the main project we're drilling, before we found Never Never. So we have multiples of these high-grade structures, and they're everywhere. So we're focused on delineating those and really putting a huge amount of ounces in front of that plant. I am a mine geologist. I am hugely focused on economics. I won't drill it unless I think I can mine it, and I absolutely think we'll be mining this shortly. That's to put it in plan view. It's quite zoomed out, but basically the areas that I was just showing you, the Gilbey's pit that was uneconomic formerly, and the high-grade chutes are sitting in that blue strike. The area where Never Never is, the 1 million ounces, or just shy of 1 million ounces at the moment, is right where that red circle is. And then Sly Fox, which is the other one I was just showing you, and I apologise for my scribbling, but that's how tightly constrained this is. We've got a mill that sits right there. So it's that close. That's a 2-kilometre radius circle around those pits or those deposits, and it's all on granted mining leases. So we're very close to permitting anything we find. Our strategy is growth, delivery of drill results. I don't like standing up here and talking about things I don't believe in. I don't like saying the word potential every 5 minutes. I like to give people actual facts to look at. We have delivered almost 1 million ounces in front of an already built plant in less than 18 months. That is a huge thing that I'm proud of. As the guy that's led this team, they were pretty beaten when I came in there. They'd been, they hadn't been producing any profit for a long time. So I took a pretty beaten team and now I've given them something to look forward to. We've got 5 rigs on site, 28,500 metres underway at the moment, 5 different targets. We've got a geophysical crew on site doing gravity at the moment to find more of these high-grade structures, regular news flow for investors to keep everybody interested and excited in what we're doing and informed, because I love to communicate, as Christy has accused me of. I love to speak about what we do. And your exploration target. Now, exploration targets are sometimes not worth the paper they're printed on, but we set targets we know we can hit. That's what we're going to go after. Mineral resource estimates due middle of this year. So lots of news flow, lots of drilling. Those rigs are never quiet. So that's what we're about. We're about drilling. We want to de-risk the infrastructure we've got. We want to de-risk the investment that people have made in this company. I want to change what people think about what this company used to be. And just so you're aware, you may not all know that we used to be Gascoyne Resources, and it was one of the poster children for what not to do when you go into production, which is take a very marginal deposit, build a big plant in front of it, take a huge debt piece, and then promptly go broke. Why invest in Spartan? As I said, facts. High grade infrastructure, proximity to that infrastructure, proven ounces, growth, the team delivers, we're creating value. A lot of people stand up here and say we're creating shareholder value. I take that really seriously. So we are delivering shareholder value. That 62% increase in share price since we raised money last year, I take that very personally. So we will continue to keep growing that value. Super focused, you can probably tell. I love doing what I do. We drill high grade and we deliver those results to the market. Seems very simple. Target. Some people think we're going to get taken out by someone else. I think we're running pretty hard at the moment and our value's crept up quite nicely. The best defense to an offense is to be higher priced. So we're running very hard to make sure that we are, either a very high price takeout for someone, or we're just going to build this value and deliver it to our shareholders. Everyone says they're undervalued. Okay, maybe I'm pretty expensive at the moment as an exploration company, but when you think about it, we've got a plant all on granted mining leases, all the permits, we're drilling high grade, we've probably got the best discovery you've seen. I mean, you can have a look, but in Australia at least, there's not much that compares to this. And that's it, back to drilling.
Thank you very much, Simon. Last but not least, our final presentation today is from Matsa Resources. Set in the premier gold province of the Eastern Goldfields of Western Australia, Matsa has identified 936 ounces of gold at the Lake Carey project with additional resource drilling planned for the coming year. Here to tell you more is Executive Director and Exploration Manager Pascal Blampain.
Thank you, Christy, and ladies and gentlemen, appreciate your time here today. Matsa Resources, we're commencing production in 2024, so that'll be most of my talk this afternoon or this evening. Just quickly speaking, with regards to the corporate overview, where, as Simon said, a lot of companies will say they're undervalued. We certainly believe that we are. 478 million shares on issue at the moment. We've finished at 3.1 cents today. We're just shy of 1 million ounces at 2.5 grams. Our top 20 shareholders hold 59% of the company. So we're a gold-based company with a lithium twist. At the end of the day, I'll be talking about the Lake Carey gold project in Western Australia. So there's Lake Carey there in the background. It's an ephemeral lake system, so it's actually rarely actually flooded. It's a dry lake setting and relatively easily accessible for modern drilling. So as I mentioned before, we're a gold company with a lithium twist. We've got copper and lithium assets in Thailand. I'll be talking about those on Wednesday, but today I'll be talking about the gold in Western Australia. 936,000 ounces, just shy of 1 million ounces. Pretty confident the next drilling program will take us over the 1 million ounce mark at 2.5 grams, which is pretty healthy, considering nearly everything there is open pittable material. We've only got one underground resource, which is associated with the Red October gold mine. The regional setting, we've got just shy of 450 square kilometres in the eastern part of the Yilgarn Craton, and you can see there, during the course of the last 3 years, our exploration has increased that resource from 439,000 ounces to 936, representing 213% increase in the resource. So we're quite happy with that sort of result. We expect to be doing some more drilling over the course of the next 24 to 36 months and actually substantially increasing that number. Arguably one of the best addresses in the gold industry, Yilgarn Craton, and then from there we're in the eastern part of the goldfields region there, Tier 1 jurisdiction. The mineral potential map there on the right-hand side, you can see 2 key areas that have been identified or that were sort of highlighted from the CRC Geoscience Australia work. The bottom circle there is the Kalgoorlie region, and then the top circle up the top there is the Laverton, Lake Kerry region. Our Lake Kerry Gold Project, we're not just an exploration play, we actually have 3 mines. The Fortitude Gold Mine, which was a trial mine that we completed in 2018, that material was, we mined about 110,000 tonnes, we sent that to Sunrise Dam, which is owned by AngloGold Ashanti, so we know how that behaves in the mill. We've got the Devon Gold Pit, which I'll talk to about shortly. We're planning on putting that into production later this year. And then we've got the Red October Gold Mine as well, which is an underground operation. We've got a truckload of prospects and exploration targets as well. That there is our resource outline. You can see there in the red boxes, Red October, 244,000 ounces at about 5.6 grams. But the main one that I want to talk to is the Devon Pit. It's a small resource, but should generate some good cash later this year and into next year. We've also got the Fortitude I mentioned just before, 489,000 ounces there, and then a number of other smaller prospects that just need a fair bit more work. We're surrounded by Sunrise Dam out and AngloGold Ashanti out to the west. To the north of us is Goldfields and Wallaby and Granny Smith, and then down to the south we've got Northern Star at the Deep South project. The Devon Pit, these just recently announced these results. They were drilled late last year. You can see there some sensational grades. It's narrow vein in all the true sense of what narrow vein gold is, but you can see with regards to some of those hits that the grades are quite healthy. That there on the right-hand side, the picture is the pit. It was mined in 2015-16. Basically took out all the oxide, like a lot of the older pits in the Goldfields region. Took out all the easy oxide. When they hit the fresh dirt, that's where they stopped. So we're working on that at the moment, and I've got some more numbers to talk to there. So the last mining study that we did showed a return of about $37 million, and the mine produced just shy of 40,000 ounces. Now that was optimised at $2,000. $2,000 that is, Australian, by the way, and using a gold sales price of $2,650. At today's price of $3,300, I'll let you do the maths as what that impact would be. We're talking about $600 to $650 more than what that was optimised at, so that should be a healthy return. Permitting, so as I mentioned before, we're pushing this project pretty hard. We expect to get the last of the permits around about mid-year. We're just completing a flora study. We're We've been hit by the rains recently, so that's just pushed us out a little bit by about 3 or 4 weeks. But as I said, we expect permitting to be completed by about mid-year, dewatering by about the third quarter of this year, and then we expect to be mining by December. Fortitude Gold Mine, as I mentioned before, that was a trial pit completed in 2018. You can see there the 3 shallow pits. That would be amalgamated into one significant pit there that's more than 1 kilometre long. It's about 250 metres deep, and at its widest point, it'll be nearly 300 metres wide. That produced 132,000 ounces, and again, this was optimised a couple of years ago using a $2,000 gold price and a gold sale price of $2,400, and that gave us a return of just shy of $100 million. Again, at today's gold price, you can imagine what that might look like. So we're going to be working on that one shortly as well. Red October, high-grade underground mine, narrow vein mining, again, in every sense of the word of narrow vein mining. We do know that there's a lot more to be found. The most recent resource that we did was the lionfish resource, which is this one here. That produced about 56,000 ounces at a grade of 6.4. It remains open along strike. It remains open at depth as well. You'll see there's a green shape on the left-hand side. That was generated from some seismic work that we did and sub-audio magnetic work that was previously done by Saracen. We did the interpretation on that and generated a shape. So that shape is ready to be drilled. Lo and behold, there is one historical hole that I haven't shown there, which is about 1.2 kilometres depth, drilled from surface, and it did return some good-looking mineralisation or alteration with a best intercept of about 2 metres at 2.6. So it shows that potentially this system is quite real. Just quickly, broadly, in terms of the geological setting, you can see there all the high colours. This is a magnetic map. We've got 94 kilometres of strike extent of these really strong magnetic signatures, and you'll see there that most of the major deposits lie along these structures. So all the deposits that we've been looking at, the prospects that we've been looking at, they sit along those as well. Fortitude North is our recent exploration play that we drilled last year, around about May last year. You can see there those intercepts, 25 metres of 3.3, not big, well, they're not really massive high grades, but they are absolutely consistent. You can see there high 2s, 3s and 4s, but the important bit is you can see the volume of, or the thickness of mineralisation associated with that. The whole system is about 1.7 kilometres long. As far as we know so far, most of it is under the lake, so it has been poorly drill tested in the past. Our focus last year was that area there. We just wanted a proof of concept in terms of continuity of grade and continuity of mineralisation. And those are the sort of results that we did get. They far exceeded our expectations, and I'll show you on the next section why. The other bit that's important about this is I'm very confident that this is open pit material. The Fortitude North drilling, this is a section. I'll cut to the chase. That blue shape is what we thought we had before we started drilling. Thought we had a narrow, near vertical, thin system. The drilling has substantially changed our mind. You can see there in those pink shapes, the volume change of mineralisation is absolutely staggering. Why do we say we're undervalued? Well, this map says a fair bit about it. Our EV is around about $18 an ounce, and you can see there in terms of some of the recent mergers and acquisitions over the course of the last 24 months or so are substantially higher in many instances. The important bit in comparison to the other transactions that have occurred, if you have a look at this map, third from left, we're one of the highest grades in terms of the resources available. So I say here we're poised to realise true value, and that is because, as I said, we're going to put Devon into production. That is the key for us at this stage. We expect to be generating good cash flow in the near term or even the short term. And from that, we'll reinvest into Lake Carey. How do we expect to achieve this? Well, broadly speaking, what we want to do is grow the company. Next year, or this year and next year, we'll put Devon into production. The cash generated from that will get reinvested into drilling resources at Lake Carey. We expect from that success will generate the potential for us to put the Fortitude mines into production. And then following that, we'd expect to see shareholder value and returns to shareholders in the form of dividends, which we haven't done for quite a few years. And then we will also aim to develop our diversified portfolio, which includes the Thai lithium assets. Devon Pit will fund Matsa, and this is what it looks like. We've got the drilling completed. We have recently signed a term sheet for mining, and then right now we are working on a full mining agreement with a company called BML Ventures, which is operating a couple of other operations in Western Australia. And then from there, we're finalising some new mine designs, scheduling, all those sort of things. Regulatory approvals, as I mentioned, we expect those around about mid this year, so somewhere around June. Mining commences in terms of dewatering and site infrastructure, all that sort of stuff around about October. And we expect to see our first check come in December this year, with the bulk of it coming through by July next year. Ladies and gentlemen, thanks very much.
Thank you very much. And thank you to all of our speakers today. I'd like to invite everyone in the room to join us outside in the foyer for the gala opening cocktail party of the Tribeca Future Facing Commodities Conference, thanks to our sponsors, SRK. Thanks everyone for attending today, and see you for a drink outside.